Good evening, everyone. Welcome for today's webinar hosted by the accountancy students, buddy number 10, with a title of Partnership Accounting. And I am Stephanie Gonzalez, your host for tonight's event. So to formally start our webinar, we will first have our opening prayer, then to be followed by the Philippine National Anthem and the St. Joseph College hymn. So let's put ourselves in the presence of the Lord, in the name of the Father, the Son, the Holy Spirit.
Mga kababayan, ang pambansang awit ng Pilipinas. Kayang magiliw, telas ng sinangalan, alam ng puso, sa dikit mo'y buhay. Lupang hinirang, tuyak ka ng magiting, sa manlulupin, di ka pasisigil, sa nagagang tutok sa simoy at sa langit ng pagaw, ay hinatang tulad, awit sa paglayang minamahal. Ang isang ng patawad mo'y tagumpay na naghihinig, ang bituin at araw niya kailan pamay di magdidinig. Luman ang araw ng walhagit pagsinta, mo'y langit sa piling mo. Ang inigaya ng barkay mga amin, ang mamatay ng dahil sa'yo. St. Joseph College, your rose to thee. We love thee, our alma mater. To thee we give our hearts and all. To thee we gave our songs. Our beloved alma mater, hail to thee. We'll remember you wherever we'll be. To thy teachings now and forever, we will be loyal. We'll be loyal. To thee we shall live, and for thy honor we shall die. Our beloved alma mater, hail to thee. We'll remember you wherever we'll be. To thy teachings now and forever, we will be loyal. We'll be loyal. To thee we shall live, and for thy honor we shall die.
So good evening again, everyone, first years. So for tonight's webinar, we have our speakers. We have yours truly, Ms. Shan Gloria, Mr. Kenneth Hunrada, Ms. J. Guzmana, and Mr. J. Mark Hagimian. So let's start. Our first speaker is Ms. Shan Gloria.
Good evening, Freshies, Section C and D. My name is Shan Gloria from Section B. The first topic is from Chapter 1. Ang ato lang i-discuss is ang gist sa Chapter 1, which is partnership formation. Diba it has 3 types? We're going to discuss it one by one. So ang first type is individuals with no existing business form a partnership. Silbi kani sila, mo ni sila mga first-time entrepreneurs. Obviously, they don't maintain any journals or ledgers, so all their books are new. The accounting here is actually simple. You only need to record the investment of the partners in the new set of books. They can contribute assets, whether cash or non-cash, pwede pod og liability as long as stipulated sa ilang contract. So, let's look at the example. On April 6, 2021, Juan de la Cruz and Pedro Pinduco agreed to form a partnership. The partnership agreement specified that de la Cruz is to invest cash of 1,850,000 and Pinduco is to contribute land with a fair value of 2,500,000 with 300,000 mortgage to be assumed by the partnership. They agreed to share profit and loss equally. So ang required is journal entries and statement of financial position after partnership formation. So first, maghimo ta og journal entries para makita nato ang investment sa mga partners. So ang primero si De La Cruz ning invest si og 1,850,000 nga cash. So we're going to debit cash 1,850,000 and credit De La Cruz capital. That is to record the investment of De La Cruz. Mora na iyang investment. Then si Pinduco contributed land which is non-cash. So we need to remember that the valuation is always at fair value. If gihatag man gani ang carrying amount, i-ignore na nato kaya ang atong tan-awon is ang fair value. So atong i-record is land 2,500,000 and credit payable, mortgage payable nga 300,000. The balance would be the investment of Pinduco. So 25 minus 300,000, mo na ning kang Pinduco capital 2,200,000. And after that, let's move on to the second requirement. Mao ning statement of financial position. Kamao naman siguro mo unsa naghimo ani? The usual nga heading, partnership name, unsa nga type sa report, and ang date is ug kanus ana establish ang partnership. So i-record na to ilang assets, duha ra man, mo ni ang total, then liabilities and equity. Ang liability is kanira ang mortgage payable, then ang duha nila ka capital. So mo ni sila balance. Then move on ta sa second part. Sa ikaduha nga type is a sole proprietor and another individual form a partnership. Under this type of formation, the assets and the liabilities of the proprietorship will be transferred to the newly formed partnership at values agreed upon by all the partners or at their current fair prices. So tanaw na to ang ilang example. The statement of financial position of Stephanie Gonzalez on March 1, 2021 before accepting J. Guzmana as partner is shown as follows. So mao kibali ni ang financial position ni Stephanie sa katong ijang business pa before as sole proprietor. Then J. Guzmana offered to invest cash to get a capital credit equal to 1/2 of Gonzalez's capital after giving effect to the adjustments below. Mo ni ang first adjustment. Since naday business si Stephanie sa una, naatay steps sundon kung unsaon paghimog journal entries sa partnership formation. First, we'll need to adjust the books of Gonzalez. Then afterwards, we'll have to close that. Si Gonzalez kay sole proprietor man sa una, pero karon na jay partner. kailangan na to i-adjust o close ang books before ta mag-entry sa new set of books sa partnership. So, mao ni ang kuan first adjustment. The inventory is to be valued at 150,000. Ang inventory ko no, kane, ibutang sa saktong value nga 150,000. Sa partnership formation, ang masunod dili ang carrying value or ang book or recorded value, kundi ang fair value na jud. So kibali ang carrying value sa inventory is 180,000. I-deduct nato sa fair value kaning sa adjustments nga 150, makakuha tag 30,000. Silbi from 180,000 ning 150 na laman ang inventory, so ning ubos. In order nga moubos, atong i-credit ang inventory kay decrease in asset is credit. Mo nagdi-adiri ang inventory. Atong gamiton laman is ang capital account sa partner since tanan adjustments are to be made under his capital account. Since mag-close naman pud ang books, so no need na ipaagi pa og expense. So mo ni Gonzales Capital 30,000 and inventory 30,000. Sa ikaduha nga adjustment, the accounts receivable is estimated to be 90% collectible. Ang iyang accounts receivable is 230,000. Jaingon man dire nga 90% kani 280,000, in nga 90% is collectible. So 280,000 multiplied by 90% is 252,000. Mao kibali ni siya ang fair value as of partnership formation. Pero ang nakabutang diri ang net realizable value is 230 raman. So para mutaas kibali ang receivable, lesa na to ang allowance. Di na to adan ang accounts receivable, but instead kanira atong i-adjust. Ang idea is gipaubos ni allowance for doubtful accounts ang accounts receivable. So instead nga 252 na 230 na laman. So mga to 280 multiplied by 90% mo ng 252. Ang 252 i-minus nato sa 230. So makakuha tag 22,000. So debit allowance for bad debt 22,000 and credit Gonzales Capital 22,000. Sa third nga adjustment, interest on notes payable will be recognized. The note is dated January 1, 2021 with 12% annual interest. Indicated sa financial statement nga ang notes payable is 140 with annual interest kuno nga 12%. Kailangan nato i-record ang interest payable from January 1 kani 2021 until March 1, 2021. So that's 2 months. Normally, we debit interest expense, pero lagi manirado naman ang business. So, no need na, diretso na ta sa capital account. Ano ni siya? 140,000 i-divide nimo sa 12% nga annual interest, makakuha ta og 16,800 annually. I-divide nimo siya og 12 months, makakuha ta og 1,400 nga monthly nga bayronon. Pero i-multiply pa nimo siya og 2 ka buwan kay from January 1 to March 1. So 1/4 times 2 mao na ning 2,800. So kana then dire land will be revalued at 500,000. From ang land is 300,000 kani ning appreciate siya og 200,000 kay ning 500,000 naman daw. So we're going to debit land 200,000 and credit Gonzales Capital 200,000. Sa letter A nga adjustment, building is to be valued at 480. Ang carrying amount budget sa building kay 540. Pero ning depreciate man siya into 480,000, nakuhaan kay bali siya og 60,000. When we talk about changes in accounts receivable or depreciable assets like building, meaning naa na sila yung mga contra assets, di na to sila hilabtan, kaya ang ato orang i-adjust is kadtong mga contra assets. Whether pataas mo nang i-debit ang contra asset, parehaan eh, or paubos, i-credit ang contra asset. Lastly is, office supplies on hand that have been charged to expense in the past amounted to 15,000. Gamiton daw ko na sa partnership. Napay office supplies on hand, pero wa si Jan nakita sa financial statements. Kay maybe expense method ilang gigamit sa pag-record sa prepaid assets. So mao na atong pagawson si office supplies 15,000 and credit Gonzales Capital na 15,000. That ends the hardest part of the formation. Kailangan i-adjust kay ang measurement kay at fair value man, dili man musugot ang partner nga dili at fair value. Then afterwards, we need to close the books of Gonzales. Same day, traghapon ng ibutang March 1 sa katong na-establish ilang partnership. Kibali, ang buhaton na dire is simply debit, tanan naka-credit. I-credit po nimo tanan naka-debit. So, ang allowance for bad debts, kay di ba naturally credit ba dyan na siya? So, we're going to debit it kay pa-close naman ang books. So, ang sa dinhe, ang amount ba dyan niya ganiha kay 50,000. Ang credit amount niya is 50,000. I-minus sa 22,000 nga adjustment. So, makakuha tag 28,000 nga net balance. Then, i-copy ra nimo accumulated depreciation building 120, kani sila. And then, sa Gonzales Capital, ang ijang capital ganiha is kani 1,010,000. Ato si Jang, credit man to, credit balance. So, ato si Jang didakan og 30,000 kani, ada na pod og 22,000 nga credit balance, minusan na po og 28 nga debit balance, add na po kag 200,000 nga credit balance, then minus na po og debit balance nga 60, i-add na po nimo ang 15,000 nga credit balance. Mo na makakuha tag 1,154,200. Same ra gihapon diri ang katong mga naka-debit ganiha i-credit na ron. Pero diri sa inventory is ang beginning balance niya is 180,000. Minusan nimo sa kani nga gi-credit nga 30,000 mo nang 150,000 na laman. And there is a land, di ba yun nga i-revalue ko na siya into 500,000 mo na ito i-record din eh. After that, we'll open the new set of books sa partnership. Tanan gikuha sa books ni Gonzales, ibalhin sa books sa partnership. So, tanan naka-credit, ato na pong i-debit, kay ibalhin naman ang books. So, kibali ang cash, imong ibutang dire 150,000. Kapira kay mao man yung mga investment ni Gonzales. Pero ang diri sa building, ang ijang amount ganiha is 600,000. Minusan na nato sa accumulated depreciation nga 120,000. So, mahimo na laman si Jang 480,000. Ang sa dinhi, ang kaning allowance for bad debts, apilon gihapon nato og record kay in case nga mabayran pa sa nagkanang imong customers or something. And then mora to copy ra gihapon ang mga tanan naka-debit i-credit na ron. And then di ba si Guzmana ning invest pod. So apilon na to record. Ingon man to nga equal to 1/2 kuno sa capital ni Gonzales. So, nasolve man nato ang capital ni Gonzales nga 1,154,200. I-divide na to 2, kay katunga ra makuno kang Guzmana, mo na makuha tag 577,100. Mo na kibali ni ang investment ni Guzmana. So, mao to, after that, maghimo na po ta og statement of financial position. Ang kaning cash, gikan ni sa kang Guzmana o kang Gonzales. Then, ibutang rin mo diri tanan assets, accounts receivable, allowance for bad debts, i-deduct, muna inventory and everything, muna assets. Ang total assets is 2,124,100. Ang sa liabilities, mao ra ni accounts payable ug notes payable. 250,000 ug 140, then og interest payable po di ay, and then ang duha ka capital accounts ni Gonzales ug ni Guzmana, ang atong total liabilities and equity mao ning 2,124,100. Mo na siya sa second type. So we're going to move on sa kinalasan nga type, which is 2 or more sole proprietors form a business. On November 30, 2021, Kenneth Honrada and J. Mark Hagimit, friendly competitors in apparel business, decided to combine their talents and capital to form a partnership. The partnership name will be Studio 69 Clothing Circles. Moni ang ilang mga statement of financial position sa each nila nga business. Since naman sila business daan, we'll need to follow the steps which are to adjust and close the books. Afterwards, we have to record the investment to the new set of books sa partnership. Actually, same process ra gihapon sa ganiha. The conditions and adjustments agreed upon by the partners for purposes of determining their interests in the partnership are: so mo ni adjustments. Establishment of a 15% allowance for uncollectible accounts in each book. Ag si Honrada kay naman si Jet na 200,000 nga accounts receivable. I-multiply nimo si Ja og 15% kay uncollectible man eh. I-multiply nimo makakuha tag 30,000 nga allowance for doubtful accounts. Ang atong i-debit is Honrada capital because like I said, instead nga doubtful accounts expense, ang atong gamiton sa mga adjustments is kanang capital account sa partner. Fully siya sa income ug expense nga account kaning capital account. The next adjustment is the inventory daw ni Honrada increased by 20%. Since nakabutang man sa adjustments nga by 20%, ang 20% atong gamiton diretso sa journal entries. So mao na ni si Jang. And lastly, ang furnitures and fixtures ni Honrada to be depreciated by 15%. So mao ra gyapon ganiha. And then the next step is to close the books of Honrada. Katong tanan naka-debit i-credit and tanan naka-credit i-debit. I-copy ra nimo tanan nga credit ganiha, i-debit nimo accounts payable kani sila. Ang kaning Honrada capital, ijang capital ganiha is 480. Ja minusan credit balance mato, minusan si Ja sa debit balance nga 30,000, ada na po sa credit balance, and then minusan na po sa debit balance. So makakuha tag 455,000. Same as dire sa inventory, ang amount ganiha is 160. Naadan man og 20,000 nga debit balance gihapon mo ng 180,000. So move on ta dire sa books ni Hagimit. Ingon man nga ang kada establishment na kunoy 15% uncollectible accounts in each book. Maklaro pa ba? I-zoom laman ninyo if ever di ka dyo maklaro. So, ang accounts receivable ni Hagimit is 160,000. I-multiply nimo og 15%, mo na makakuha tag 24,000. Same format ra gihapon sa ganiha. And then ang sunod, inventory daw ni Hagimit is to decrease to 185,000. Ibali ang ijang inventory nga 200,000 nahimo na lamang 185. So naakibali decrease sa inventory nga 15,000. And di ba decrease in inventory in asset is i-credit. Mo nang na-credit ang inventory 15,000. Lastly, ang machineries daw ni Hagimit are to be depreciated by 10%. Ijang machineries is 180,000. I-multiply nimo og 10%, makakuha tag 18,000 nga accumulated depreciation sa machineries. After that, we're going to close the books. Mo to nga, ang tanan naka-credit i-debit, ang tanan naka-debit, i-credit. So, accounts payable, copy ra ni tanan, and then sa hagimit capital, ijang capital ganiha is 390,000. I-minus na ni nato sa kaning tanan naka-debit nga hagimit capital, makakuha tag 333,000. So, same na gihapon na dire, pero except sa inventory niya from 200,000, ning decrease man daw to 185. So, mga ito ibutang dire. And then, magbalhin na sila sa new set of books sa partnership nga ila na jung duha. Mo na ni ang cash ni Honrada, ijang accounts receivable, inventory of furnitures and fixtures. Pero sa furnitures and fixtures, dili na 120,000. Didaka na to og 15,000 nga accumulated depreciation kay bag-o naman nga book sa partnership, dapat dili na ma-record ang kato mga nalaspag na. Kaysa bag-o naman nga books, kibali, maingon nga second hand si Ja, pero good as new na, kay wala na nakita ang kato mga nalaspag. And then, mauna ni ang accounts payable, allowance for doubtful accounts, o Honrada capital. Sa kang hagimit, same ra gihapon, pero sa machineries, minusan gihapon o accumulated depreciation. Ang machineries niya is 180,000, giminusan na siya og 18,000 nga kuan accumulated depreciation. After that, ang next requirement is maghimo ta og statement of financial position. So mo ni siya ang heading katong agreed partnership name ug unsa nga type sa report, and then date ug kano saan na-establish ang partnership. Ang sa diri mo na ning naka-combine nila nga mga amounts na 100,000 nga cash ni Honrada o 100,000 nga cash ni Hagimit. Mo na ni 200,000. Hasta ni accounts receivable kaning 200,000 o 160 mo na ni si Ja, then i-add na pud ang allowance for doubtful accounts sa duha mo na ni si Ja. So the total assets would be 1,138,000, and ang sa liabilities and equities nga part, ang accounts payable nilang duha 100 o 250 mo nang na 350. Then, ang each nila nga capital, mo ni kang Honrada and then kang Hagimit. So, makakuha tag total liabilities and equity nga 1,138 nga na-balance ra pod sa total assets. That ends my report. Thank you so much for listening, and I hope you've learned something sa akong na report. Thank you.
So, good evening again, everyone. So, ako ang next speaker. Our discussion will tackle the partner's equity in assets contrasted with share in profits or losses, factors to consider in arriving at a plan for dividing profits or losses, the rules for the distribution of profits and losses, and lastly is the correction of prior period errors. So, the basis on which profits or losses are shared is a matter of agreement among the partners and may not necessarily be the same as their capital contribution. So, kung saan inyo inigbahin sa inyong profits and loss, di magdepende na og unsa inyong nasabutan inyong duha, meeting of the minds. Kay di ra man na siya magdepende og unsa inyong capital contribution. The equity of a partner in the net assets of the partnership should be distinguished from a partner share in profits and losses. So, kung ikaw partner ka, ang imong equity sa net assets sa partnership is lahi jud na sa imong share sa profits and losses. So, the factors to consider in arriving at a plan for dividing profits or losses. So, ang partnership profits is ma-realize ni si Ja as a result of putting together the money property, and industry sa mga partners. So, ang factors nga dapat i-consider para sa formulation sa kanang equitable profit and loss ratio is ang amount of capital invested, which is this one. The amount of capital invested by each partner and the total amount of time where each partner devotes to the business. So, ang profit sharing plans, which emphasize either the value of personal service rendered by individual partners or the amounts of capital invested by each partner. So, napoy ubang mga profit sharing plans nga mo consider sila sa importance sa both. So, muna nga sa mga kanang partners nga ang ilang gidevote is ang ilang service, they will receive salary. And for those partners nga kanang heavily invested on capital is they will receive interest. And then ang balance nga to may then be divided in a specified ratio. So an illustration to further understand sa factors na dapat i-consider is this one. Like, for example, kani si Miss Gloria, and this is Miss Guzmana. So, silang duha is partner sila sa usa ka cocoa water business. So, kani si Miss Gloria, mas dako ang iyang gi-invest sa capital, pero gamay ra nga time ang iyang gihatag para sa partnership. Unlike ni Jay Guzmana, nga although gamay rang iyang gi-invest, but kanang iyang gihatag ang iyang full knowledge and attention to the business. So, ug mag-base ka sa ilang contributions alone, sa ilang, unsaon ini kuha sa ilang profit and loss ratio, unfair kaadyo para ni Miss Guzmana, no, nga kanang gamay ra iyang makuha katungod kay service rang iyang gihatag sa partnership. That is why dapat pod nga i-consider ang provision of salaries or even bonus in recognition of the talent and time being contributed by partner Jay Guzmana. So dapat jud i-consider ang talent ug effort nga gi-dedicate ni kana Jay Guzmana sa partnership. So mao pud ni dapat dapat natong i-consider sa mga kanang performance nga ma-include sa kanang partnership. Many partnerships use profit and loss sharing agreement that give some ways to the specific performance of each partner to provide incentives to perform well. So ang bonus mo na sila ang allocation of profits to a partner on the basis of performance. So kung kinsa mo ganitong partner nga kanang performance or service ang iyang gihatag sa business, so dapat naadyo na si Jai, bonus ang tawag sa iyang allocation sa iyang profits. So ang mga example sa criteria ini kana determine sa performance method sa usa ka partner is number 1 is unchargeable hours. So mo ni siya ang total number of hours that a partner incurred on client-related assignments. So mga hours ni siya nga na gamit sa usa ka partner sa kanang mga client-related. Another is the total billings, which is the amount billed to clients for work performed and supervised by a partner. So same naghapon sila, pero kani total amount pila ang nabayad sa kani nga hours nga gihatag sa usa ka partner. The write-offs consist of uncollectible billing. So kani mga wa pa na kanang nakuha nga billing sa pag-perform sa usa ka partner sa ato sa clients. The promotional and civic activities mo ni siya ang time devoted to developing future business and enhancing the partnership name in the community. And lastly, ang profits in excess of specified levels is mo ni siya ang designated percentage sa profit nga ma-receive sa usa ka partner in excess of a specified level of earnings. So the rules for the distribution of profits and losses. So according to the legal provision, the profits or losses shall be distributed in conformity with the agreement. So same sa katong giingon kanina, pag first pa nga dapat ma-distribute jud na ang inyong profits and losses sa unsa inyong naagrihan nga ratio o kung saan inyong i-divide para fair ninyong duha. If only the share of each partner in the profits has been agreed upon, the share of each in the losses shall be in the same proportion. So if kamo nga mag-partners, naka-decide na mo og unsa inyong kanang profit sharing ratio og unsa toy inyong profit sharing ratio mo po na inyong kanang gamiton nga ratio para i-divide sa inyong losses. So same ra, ang profit, ug naa na may agreement sa profit, mo po na inyong gamiton for the losses. So under the legal provision, naay rules nga gihatag for the distribution of profits and losses. So first is sa profits. The profits will be divided according to the partners agreement again. Same ra nga ug unsa inyong nagrihan mo nay dapat ninyong way ug unsa ninyong i-divide sa inyong profits. If wala man gani agreement, para sa mga capitalist partners, the profits shall be divided according to their capital contributions. So when we say capital contributions, mo ni sila ang according to the ratio of original capital investments, or in its absence, the ratio of capital balances at the beginning of the year. So kung capitalist partner ka, ang basis sa pag-divide sa imong profit is magdepende sa pilay capital contribution nimo adto sa business. And as to industrial partners, if any, kay ba naman mo unsa na industrial partners, katong mga partners nga kanang serbisyo ang gihatag sa business. Such share as may be just and equitable under the circumstances provided that the industrial partner shall receive such share before the capitalist partner shall divide the profits. So dapat sa industrial partners kay murag mas gihatag man niya ang iyang time ug effort ato sa business, dapat siya ang unahon og hatag sa profit. Usa pa magbahin ang mga capitalist partners kay unfair pod og unahon ang mga capitalist partners na gamay na lang may mabili ni industrial partner. So as to losses, same gihapon sila sa profit that it shall be divided according to the partners agreement. And if there is no agreement as to the distribution of losses, but there is an agreement as to profits, the losses shall be distributed according to the profit sharing ratio. So mula gito, if wala mo'y agreement o kung saan ninyo pag-divide sa inyong losses, naa mo'y naagrihan if kung saan ninyo inibahin sa profit, ang katong profit mo'y inyong gamiton nga ratio. So in the absence of any agreement, if wa man gani mo'y agreement sa losses or wa mo'y agreement sa profit nga injo untang gamiton ini basis para sa kuha ninyo sa losses, para sa capitalist partners, ang losses shall be divided according to their capital contributions. Same ra gihapon nga according to the ratio of original capital investments, or in its absence, the ratio of capital balances at the beginning of the year. And as to purely industrial partners, if any, shall not be liable for any losses. So nga naman nganong ang mga purely industrial partners, dili man sila liable for any losses. So they are not liable for losses because he cannot withdraw the work or labor already done by him, unlike the capitalist partners who can withdraw their capital. So luoy pud kaadto nga si industrial partner nga naghatag na og labor og work nja kana pabayron paghapon sila sa losses, murag sakit na kadusbot, murag doble-doble na pud ang ija. In addition, if the partnership failed to realize any profits, then he has labored in vain. and in a real sense, he has already contributed his share in the loss. So the last topic that I will be discussing is the correction of prior period errors. So when we say prior period errors, as per the International Accounting Standards, IAS number 8, which is the accounting policies, changes in accounting estimates, and errors, mo ni sidya ang mga omissions from and other misstatements of the entity's financial statements for one or more prior periods that are discovered in the current period. So mo ni sila ang mga error, misstatements, or mga ek pa nga kanang naa sa financial statements o sa ka entity nga nahitabo sila kanang before, the year before, or the year before pa nga na-discover na sa karon nga period. So it may occur as a result of mathematical mistakes, mistakes in applying accounting policies, misinterpretation of facts, and fraud or oversights. So mga examples ng mga prior period errors are the error in estimation of depreciation, errors in inventory valuation, and omission of accruals of revenue and expenses. So, ang mga material prior period error must be restated to report financial position and results of operations as they would have been presented had the error never taken place. So, ngayon ganitag material prior periods, mo ni sidyang mga errors nga naa sidyay effect sa current period. So, if naa mo gani effect, so dapat ato dyan na sidyang i-adjust, ato sidyang i-restate para masakto na ang atong financial position nga as if wala na siya nahitabo. So the amount of the correction of prior period error that relates to prior periods should be reported by adjusting the opening balances of partners' equity and affected assets and liabilities. And the correction of prior period error is excluded from profit or loss for the period in which the error is discovered. So, ang correction is sa prior period, di natin mo siya apilon sa inyong profit or loss sharing kung kanus siya na-discover. If the error resulted in an understatement of profit in previous periods, a correcting entry would be needed to increase capital. So, di ba, og understatement, og kuwang inyong profit, it means nga ubos ra ang kwarta. So, dapat atong increase ng atong capital para ma-balance na siya. If an error overstated profit in prior periods, then capital would have to be decreased. So, kung taas upod kaadyo ang profit, unya tungod na sila sa prior period errors, muna dapat atong ubsan ang atong capital. So, the effect of the error correction will be divided based on the applicable profit and loss ratio. And that would be all. Thank you.
So hello everyone. Now we are down to the distribution of profits or losses based on partners agreement. I am Kenneth Honrada, a fourth-year student from Section B, and I will be explaining to you unsaon pagbahin sa profits or loss sa partnership. So for the division of profits or losses, a firm should divide among its partners per the provision of their partnership deeds. So kung sa daw ilang nasabutan or naagrihan sa pagbahin sa ilang net income. However, mo nang na-discuss ni Ms. Stephanie ganiha nga, if there is no written or oral agreement among the partners, the law prescribes that partners should share profits and losses equally. So here are the possible methods of dividing the net income or loss of partnership. First, we have equally or in other agreed ratio. Second is based on partners' capital contribution, motong ratio of original capital investments, ratio of capital balances at the beginning of the year, ratio of capital balances at the end of the year, and then ratio of average capital balances, and then by allowing interest on partners' capital and balance in an agreed ratio, and then by allowing salaries to partners and the balance in an agreed ratio, by allowing bonus to the managing partner based on profit and the balance in an agreed ratio. And lastly is by allowing salaries, interest on partner's capital, bonus to the managing partner, and the balance in an agreed ratio. So, mo ni siya combination sa kaning 3, 4, o 5. So, para mas masabtan ang kaning mga methods, ato silang tagsa-tagsaon using aning problem. So assume that on January 1, 2019, C and Chu form a partnership with an investment of 30,000 by C and 60,000 by Chu. So mo na kibali ang 30 ug 60 mo na ilang original capital o ilang balance before pa sila na form ang ilang business. So on December 31, 2019, after closing all income and accounts expense account, the income summary account shows a credit balance of 60,000. So si Siog Chu na sila net income nga 60,000, which is mo nang ilang bahinon as profit, representing profit for the year 2019. So changes in the capital accounts during 2019 are summarized as follows. So mo ni si Jack. So first, di ba ingon to nga koan, ingon to nga A divided by equally. So from their profit na 60,000, since duha man sila, so sa partnership, so na sila kuan, so 60,000 divided by 2, so na sila 30,000 each. So na sila 30,000 each partners. And then ang mo-appear ana sa atong journal would be debit income summary of 60,000 and then credit drawings ni C ug ni Chu nga 30,000, which is balance sa atong income summary. And then next is unsaon pag-divide sa profit or loss using their capital investment. So first we have the original capital investment. And since we're talking about original capital investment, adto ta mag-base sa amount nga capital sa pag-form pa lang sa ilang business, which is kaning kuan 30 by C o 60 by Chu. So using 30 and 60 as the ratio, we will have a total of 90 as 90 nga ato magamit sa pagbahin sa profit o loss or profit nila kuan C ug Chu sa business. So sa kay C, 60,000 nga net income times iyang original contribution nga 30 divided by 90 nga total sa ilang kuan original capital contribution, si C will have a share of profit na 20,000. And then same goes for Chu, mora gyapon ang process ay atulay multiply ang iyang kuan original contribution, then Chu will have a share of profit na 40,000. And then ang mo-appear ana sa atong kuan journal entry would be debit income summary of 60,000 and then credit drawings ni C ug ni Chu nga 20 ug 40. So we will have 60 nga balance sa atong income summary. And then same process ra gihapon sa pagkuha sa kuan capital balances at the beginning of the year. So using kaning capital balance as of January 1, 2019, na siya'y kuan 40 and 60 ni C o ni Chu. So kuan so using kaning 40 ug 60 as the ratio, we will have a total of 100 nga atong gamiton po sa pagbahin sa profit nila nga 60,000 sa business. So sa kay C, same ra gyapon to ganiha, i-multiply ra ang kuan beginning capital balances divided by the total nga beginning capital balances sa both partners. So C will have 24,000 nga share sa profit. Same goes for Chu gihapon nga iyang beginning capital balance may multiply sa iyang beginning capital balance and then i-divided by sa both nga kuan capital balance nga beginning, so he will have a share of profit na 36,000. And then ang appear ana sa atong journal entry would be debit income summary of 60,000 and then credit drawings ni Siug ni Chu nga 24,000 and 36,000. Same ra gyapon nga mo balance sa atong income summary. Same ra gyapon sa kuan, gamiton gyapon to nato nga process sa pagkuha sa ending. Since naman to dire capital balances as of December 31, 2019 na siya 60 o 100. So using kaning ratio, we will have a total of 160,000 na atong gamiton po sa pagbahin sa ilang 60,000 nga net income sa business. So Para ragyapon ganiha, gimultiply nato ang iyang ending capital balance nilang duha ug gi-divide sa total na ending capital balances. So C will have a share of profit na 22,500 and then Chu will have a share of profit po na 37,500. So ang appear ana sa atong journal entry would be debit income summary of 60,000 and then credit C og Chu drawings na 25,500 o 37,500 which is balance na po gihapon sa income summary. Next, we will move on to the average capital balances. So, mo ni siya ang libog-libog gamay na pag-divide sa profit or loss kadagang ways unsaon. And I prefer nga ipang T-account sila para dali ra masabtan. So, using kani nga mga activities, kaning nasod sa kaning sod sa box, ato sila ang tagsa-tagsaon og T-accounts, and this will be ang iyang porma. So, mo ni kang C ug kang Chu. Mo ni lang mga activities gilahi-lahi ra. And then sa ubos, makakita sa mo date, amount, and then months unchanged. So when we say months unchanged, mao ni siya ang months nga wala milihok ang capital nila until sa next transaction. So masabtan na ni siya later on, inig-discuss nato, and then kani average capital. So let's start sa pagkuha ni C. So starting from January 1, na dire na siya amount na 40,000 beginning. And then for the months unchanged, atong iphon nga kuan kibali there are 2 months kay di ba January to March pila man ka kuan months wala ni lihok way labot ang March kay kuan man na naman siya investment na nahitabo. So 2 over 12. So, nga naman pong 12, kaya di ba, average nato ang capital so sa usa ka year. And then sa usa ka year is 12 months man. So, divided by 12. So, 40,000 multiplied by 2 divided by 12, we will get an average capital of 6,666.67. And then, sa pagka-March 1, na siya investment na 20,000. So, ato siya add sa atong previous nga amount nga 40,000. So now na sila running balance sa capital na 60,000. And then for the months unchanged, mao ra gihapon og pila ka months wala ni lihok ang ilang capital. So March, April, May, June, July, way labot ang August kay na naman pud sila investment nga 20,000. So 5. So 60,000 times 5 divided by 12, we will get an average capital of 25,000. And then, pagka August 1, na napod sila investment na 20,000. So, ato napod siya i-add sa atong previous nga amount na 60,000. And then, C will have a running balance sa capital na 80,000. And then, for the months unchanged, magyapon to, pila ka months wala nilihok ang iyang capital. So, August, September, way labot October. Kaya na naman po siya withdrawal. So, 2. So, 80,000 times 2 divided by 12, we will get an average capital of 13,333.33. And then for October 1, na siya withdrawals. So withdrawals, kibali ato na siya i-deduct sa atong kuan previous nga amount which is 80. So now, na naman sila running balance na 60,000. I mean, si C na running balance as of October na 60,000. And then for the months unchanged, ato nang apilon si December kay may last na month sa kuan year. So October, November, December, so 93. So 60,000 times 3 divided by 12, we will get an average capital of 15,000. And then ato na siya i-total, so C will have a total average capital of 60,000. So, nandumi nga 60,000 kag C. And then, same ra gyapon sa pag-solve sa Chu. So for Chu, starting from January 1, nasa ay amount na kuan pud 60,000. And then for the months unchanged, pila na pud ka months 1 in lihok ang kuan, 1 in lihok ang iyang capital. So January, February, March. So 2, 60,000 times 2 divided by 12, we will get an average capital of 10,000 for Chu. And then pagka March 1, pagka March 1, na napod si J investment na 50,000, nga ito i-add sa atong previous nga amount na 60,000. So now, si Chu na nasa dyan running balance na 110,000. And then for the months unchanged, mga gapon, March to August, so na ay 5 months nga wala ning lihok ang iyang kuan capital. So 110,000 times 5 divided by 12, we will get an average capital of 45,833.33. And then pagka August 1 na po na po sila investment nga ito'y add sa atong previous nga amount nga 110,100, we will get a running balance of 150,000. And then for the months unchanged, August to November, August, September, October, November. Also 93. So 150 times 3 divided by 12, we will get an average capital of 37,500. And then for November 1, na kunoy kuan withdrawal si Chu nga 50,000. So ato na po si Jai deduct sa atong amount na 150. So si Chu na si Jai running balance as of November na 100,000. And then for the months unchanged, November to December, so 2. So 100 times 2 divided by 12, we will get an average capital of 16,666.67. So we will get an average total capital for Chu na 110,000. So after makuha ang tig total average capital sa partners, which is katong ganiha kang C nga 60 and 100 karon kan Chu, we will get a total of 170 total average capital for both partners na atong gamiton sa pagbahin na sa ilang share sa net income. So, mana to, based ani, ubos ni C. So, for C, we have average equals 60,000 nga net income divided by 170 nga katong ganiha total average capital for both partners, and then multiply by katong kang C ra nga kuan, total average capital. Moto, C will now have a share sa kuan profit na 21,176. And then same goes for Chu gihapon nga average is equal to net income divided by 170 total average times 110 na total average ni Chu. So Chu will now have a share in profit na 38,824. So mo appear ana sa atong journal entry would be kaning sabos. Debit income summary of 60,000 and then a credit of drawings nilang duha ni C ug ni Chu nga 21,176 ug 38,824. So balance gyapon sa atong income summary. So now we will have another method of dividing the profits or losses of partnership by allowing interest on partners' capital and balance in an agreed ratio. So from the slide, let's say the interest on partners' average capital balance is at 12%, with any remaining net income or loss to be divided equally kuno gihapon. So using the katong total average capital for both partners ganiha, we will multiply it by the interest na 12%. So sa kang C, nasa jay 60,000 ba to? So 60,000 times 12%. So si C will now have an interest of 7,200. Then same ra gyapon sa kang Chu, nasa jay 13,200 and a total of interest na 20,400. And using the squeeze method, since given na ang atong net income na 60,000, atong kuhaon ang balance na ilang bahinon kada partners. So net income of 60,000 minus 20,400, we will get a balance of 39,600. So kaning 39,600, mao kuno ni si Jam bahinon 50-50 by partners. So 39,600 divided by 2, so both partners na sila itag 19,800, and then they will share in the net income or they will share a profit of 27,000 for C and 33,000 for Chu. And then ang mo appear ana sa atong journal entry would be debit income summary of 60 and then credit drawings ni C unit Chu nga 27,000 o 33,000. And then the next method is by allowing salaries to partners and the balance in an agreed ratio. So let's say the partners agreement provides for an annual salary of 30,000 to C and 20,000 to Chu, with the resultant net income or loss to be divided equally. So ato ra gyapon na jay apply diri sa abos. So salaries ko no na sila tig 30,000 o 20,000. So we will have a total salary of 50,000. And then given na ba yato atong kuan same ra gyapon ato squeeze method, given atong net income, so 60,000 minus 50,000, we will have a balance of 10,000 nga ato i-divide equally. So C and Chu will have a kuan bahinon nila og tag 5,000 5,000. So na sila i-share sa profit na 35,000 o 25,000 na mo appear ana sa atong journal entry same ra gyapon sa ganiha. And so next method mo jump na lang ta aning kuan sa sa kaning allowing bonus kay ang last method kay ma-appeal naman siya og kuan solve pod. So kanina tang allowing salaries, interest on partners, capital, bonus to the managing partner, and the balance in an agreed ratio. A combination aning tulo. So assume that natay laing problem di ay. So assume that the partnership of C and Chu has a net income of 190,200 before salaries, interest, and bonus to partners. So the partners contract provides the following. So nanagyapon sila given na ang salaries ni C ni Chu nga 30,000 each, and then interest on capital account balances ni C nga 7,000 o kuan 3,200 ni Chu kuno, and then makareceive po kuno og 20% na bonus sa net income si C. And then bonus is not based on net income before allowance for salaries, net interest, and bonus. So inig-apply na to ana sa ubos ato ibutang atong net income nga 190,200. Ato ray apply ang salaries sa 30,000 o 30,000 each. We will have a total of 60,000 na salaries. And then i-apply ra gyapon nato ang interest sa 7,000 o 3,200. We will get a total interest of 10,200. And then sa bonus, unsa man nag-solve sa bonus. So now we will using the formula kaning bonus equals percent times the basis. So ang basis nato is net income before salaries, interest, o bonus nga kadto 190,200. So 20% times 190,200. So si C will receive a bonus of 30,040. So ato na ibutang dito nga kuan 38,040. And then same process na to ganiha ato gyapon squeeze method na pod kay given na atong net income nga 190,200. So minusan na nato siya sa salaries nga 60 and then 10,200 og 38,040. So na sila balance na bahinon 50-50 nga 81,960. And then 81,960 divided by 2 kay 50-50 man. So na sila 40,900 nga 980 nga each nga ma-receive. So ang share sa profit ni si Unichu is 116,020, and then si Chu na siya ma-receive na 74,180 na profit. And that's all for the distribution of profits or losses sa partnership. Thank you.
So, good evening everyone. My name is Jay Guzmana, and tonight I'll be discussing an illustration regarding partners' equity. So, Rigel Aleje and Radley Rigo are partners sharing profits and losses in the ratio 7 to respectively. The following were taken from the partnership records for the fiscal year ended May 31, 2015. So, the partner's capital account balances for Aleje is 200,000 and for Rigo is 140,000. Partner's current account balances as at June 1, 2014 or ang ilang beginning balance for Aleje is 15,000 and for again abriya pang Rigo ni sorry na mali ra. And for Rigo is 13,000 pesos. So wala na edit. Wala save. Wala save ag pang-edit kanina. So during the year, the partners made the following drawings from the partnership bank account.
For Aleje, ang iyang drawings amounted to 10,000 on August 31, 2014. And same amount pagka November 30, 2014 and pagka February 28, 2015 is 10,000 gihapon and pagka May 31, 2015 is 10,000. And while Canarigo is 7,000 on August 31, 2014, 7,000 on November 30, 2014, 7,000 on February 28, 2015, and 7,000 on May 31, 2015. Interest is charged on drawings at 12% per annum or 12% per year. Interest is allowed on capital accounts and credit balances and current accounts at 12% per annum. Profit for the year ended May 31, 2015 is 102,940. So first, we have to calculate the total interest chargeable on the partner's drawing. So first is kang Aleje. On August 31, 2014, ang iyang drawings is 10,000 multiplied by the 12% interest per annum multiplied by 9 kay pagka August 31, 2014 to May 31, 2015 is 9 months. Mao nang 9 divided by 12 which is equals to 9,000. And pagka September 30, 2014, same gihapon iyang drawings which is 10,000 multiplied by the 12% interest 12% multiplied by 6 kay 6 months man divided by 12 which is 600. And pagka February 28, 2015, same ra gihapon iyang drawings which is 10,000 multiplied by the 12% interest multiplied by 3 divided by 12 which is 300. So ang iyang total interest chargeable is 1,800. And for kang Rigo, pagka August 31, 2014, ang iyang drawings is 7,000 multiplied by the 12% interest per annum multiplied by 9 divided by 12 which is 630 pesos. And pagka September 30, 2014, ang iyang drawings is 7,000 multiplied by the 12% interest multiplied by 6 months divided by 12 equals 420. And pagka February 28, 2015, ang iyang drawings is 7,000 multiplied by the 12% interest per annum multiplied by 3 divided by 12 which is equals to 210. So ang iyang total interest chargeable is 1,260. So i-add ng 1,800 and 1,260. The total interest chargeable for both partners is 3,060 pesos. So next is we have to calculate the profit share of each partner. So ang salaries ni Rigo is 15,000. So in getting the interest and capital and current accounts ni Aleje, we have to multiply the 12% interest to by 215,000 which is equals to 25,000. And then kang Rigo, 12% interest multiplied by 153,000 which is equals to 18,360. So the total interest and capital and current accounts is 44,160 pesos for both Aleje and Rigo. So in getting the residual profits is to be divided in a ratio 7:30. So ang ilang total residual profits is 46,840. So atong silang kuhaon in ratio 70:30 respectively. So ang 70% sa 46,840 ni Aleje is 32,788. Ang kang Rigo is 30% multiplied by 46,840 is 14,052. So ang ilang total is 46,840. So the share of partners in profits for Aleje, ang iyang share is 58,588 And for Rigo is 47,412, which is the total share of partners in profits for both Aleje and Rigo is 106,000. So next is compute the balance of each partner's current account as of May 31, 2015. So, for Aleje, ang iyong beginning balance is 15,000 plus the share of partners in profits 58,588 minus sa iyong drawings which is 40,000 pesos kay kaupat man siya nag-withdraw for 10,000. So 10,000 times 4 is 40,000 minus interest on drawings kay iyang interest sa 40,000 is 1,800. So ang ending balance ni Aleje is 31,788. Agkang Rigo pod, ang iyang beginning balance is 13,000 plus the share of partners in profits 47,412 minus sa iyang drawings na 28,000 kay kaupat po siya nag-withdraw nga 7,000. So 7,000 times 4 is 28,000 minus the interest on drawings. So ang iyang interest sa 28,000 is 1,260 which is equals to 31,152 ang iyang ending balance. So total ending balance sa both partners is 62,914. So my next topic is partnership dissolution. So partnership dissolution is given by the Article 1828 by Civil Code of the Philippines. So based on Article 1828, partnership dissolution is the change in the relation of the partners caused by any partner ceasing to be associated in the carrying on as distinguished from the winding up of the business. So, meaning, if na-change sa capital structure sa partnership, it's either positive or negative, that is called partnership dissolution. So, what are the causes of partnership dissolution? So, the Civil Code of the Philippines provided us 3 reasons why mahitabo ang partnership dissolution. First is by the acts of the partners. As we all know, partnership dissolution is a mutual agreement between the partners. So basically, since they have a free will to enter into a partnership contract, they also have a free will to depart from that contract. So meaning if di na ganahan ang usa sa ilang partnership, the partnership will automatically dissolve. At the same time, if ganahan sila magsod og other partner, pwede ra pod. Another cause is the operation of law. When we say operation of law, the partnership or the partners have no control. For example, insolvency of one of the partner or one of the partner dies. Since dead naman ang usa ka partner, wala na siya kakayahan to carry out his obligations, so the partnership must be dissolved. Another one we also have by judicial decree. When we say judicial decree, there should be an equal court order. For example, insanity of one of the partners, kahit nabuang ang ilang usa ka partner, or fraud made by the one of the partner. For example, gidagan sa usa ka partner ang ilang kwarta. So, if that's the case, bisan pag tuloy sa partners ang partnership because na ay court order nga i-dissolve na ang ilang partnership, so the partnership must be dissolved. So that's the case. We will proceed to the solution. So this will be the basis of our accounting treatment of which causes. Pwedeng admission of partners, pwede pod retirement of partners, a partners dies, or partners decide to incorporate from partnership to incorporation. So, in my discussion, kanang mag-focus ko sa admission of partners. So, admission of partners falls into 2 categories. First is purchase of interest from existing partners. So, meaning, the new partner will buy or purchase an interest sa existing partner. Or pwede pod nga ang new partner dili si mo palit sa existing partners, what will he do is invest directly to the partnership. So, in partnership dissolution, these are the methods that we have to consider. Under partnership dissolution, the first procedure we will do is update the capital accounts of the existing partners as of dissolution. When we say dissolution date, first we have to determine the profit shares of the existing partners. At the same time, we have to revalue the assets if necessary in case there's a specific assets revalued. If the accounts is already adjusted, so the next step is the terms and conditions must be ascertained by the partners. So, before mahitabo ang dissolution, sabutan na sa partner daan because that will be the basis sa accountant for recording purposes. So, after that is to record the change in ownership and revise the partner's equity para ma-prepare ang bagong structure sa partner's equity. So in purchasing interest from existing partner na ay two consideration. First is without revaluation, meaning kung pila ang capital sa existing partner, maura pod nig-admit sa new partner. Or with revaluation, meaning the existing asset of the existing partner will be revalued. So the existing capital will be changed is either positive or negative or upward adjustment or downward adjustments. So in purchasing of interest from existing partners without revaluation, mao ni ang factors nga atong timan-an. Transfer of ownership from existing partner to new partner. The transaction is personal between existing partner and the new partner, or the partnership assets are not affected. The current profit and loss ratio should be revised accordingly based on the percent of interest the existing partner selling to the buying partner. In purchasing of interest from existing partner with revaluation, partnership assets will be affected. So here's an illustration example. The AB partnership had the following capital balances before admitting C. So mao ni ang ilang capital balances before nila gipasol si C sa ilang partnership. So ang capital ni A is 20,000, kang B 10,000 with a total of 30,000. Ang ilang profit and loss ratio is 80% para kay A and 20% para kang B with a total of 100%. So C purchased 50% of A's capital for 12,000. So si C may purchase of 50,000 sa capital ni A for 12,000. So ang capital ni A is 20,000. So 20,000 times 50% is 10,000. So 10,000 ra ang napalit ni C pero ang iyang gibayaran is 12,000. Pero as I've said earlier nga, if walay evaluation, ang atong assumption is personal transaction between C and A. Therefore, bisan pa nakakwarta si A of 2,000 pesos, ang partnership is wala nilabot ingato because without revaluation man, so walay makwarta ang partnership, walay labot ang partnership. So determined the balance ay napaday. So in recording investment ni C, debit A for 10,000 kay nakuhaan man ang iyang capital, credit C capital for 10,000 kay napunan man ang iyang capital. So determine the balance of each partner after admission of C on each independent cases. So mao na ni ang transaction after gipasold na si C sa ilang partnership. So before, ang ilang profit loss and ratio ni A is 80%. kang B 20%, kan C wa pa total of 100%. Kay pag sud na ni C, ang 80% makuha na og 40% kay ang gi-purchase ni C is 50% man. So ma-add sa kang C. So the new profit and loss ratio is para kay A 40%, kang B 20%, and kang C is 40% with a total of 100%. So ang ilang capital balance before admitting C, before nila gipa sold si C sa ilang partnership, ang kang A is 20,000, kang B 10,000, kang C 0, and with a total of 30,000. So after gipa-sold si C, nakuhaan ang capital balance ni A og 10,000. Gidagdag diri sa kang C. So the new capital balance for A is 10,000, kang B 10,000, and kang C is 10,000. So same ra gihapon ang ilang total balance. So mao ra to. Thank you.
Hi guys, good evening everyone. So my name is Jamer Kagimit. I'm from BSAIS 4D. So the topic I'm going to discuss are admission of a partner, bonus to new partner, withdrawal or retirement of a partner, and incorporation of a partnership. So let's start. So admission of a partner by investment. So you have heard from previous speaker of the bonus to all partners. So now I'm going to talk about premiums, which will be treated as a bonus from the equities of all partners, which will be credited to the new partner. So there are certain cases. So first is agreed capital is given or stated. So that's a bonus to new partner, no asset revaluation. Then agreed capital is not given or explicitly stated. So we're going to use bonus method. So the following are the illustrations of various problems involving admission of a new partner by investment. So agreed capital is given or stated. So Miranda and Calamba are partners with capital balances of 400,000 and 200,000 pesos respectively. So they share profits in the ratio of 3:1. So they both agreed to admit Magdaraog as a member of the partnership. So Mr. Magdaraog invested 240,000 pesos for a 1/3 interest in the total capitalization of 840,000 pesos. So remember guys nga, ang capital balances ni Miranda and Calamba is 400,000, 200,000. That's a total of 600,000. Then i-add na to ang 240,000 nga investment ni Mr. Magdaraog, a total of 840,000 pesos. So the capital credit for Magdaraog, so gikan na siya sa 1/3 of total agreed capital. So remember po nga ang bonus method, it's always equal gajud ang total contributed capital and agreed capital. So 840,000 times 1/3 equals 280,000 pesos. So 280,000 pesos man ang capital credit ni Magdaraog. So his total capital credit is more than his investment. So it's more than of his investment of 40,000 pesos. So asa man na nato kuhaon? So mag-base ta sa katong profit and loss ratio ni Miranda and Calamba nga 3:1. So that's 40,000 nga treated as bonus. So times 3/4 manang 30,000. 30,000 will be deducted to the capital balance of Miranda. So man ang iyang agreed capital na naman is 370,000 pesos. So ang kakalamba pod deducted by 10,000. So man ang 190,000 pesos na naman. So the necessary entry, so to record his investment, So debit cash of 240,000. That's investment of Magdaraog. Then to record the bonus to the new partner. So debit Miranda Capital for 30,000 and debit Kalamba Capital for 10,000 pesos. So kanang debit sa ilang capital mo ng mga deduction. Then the total capital credit for Magdaraog is 280,000 pesos. So muna siya ang illustration sa agreed capital when agreed capital is given or stated. So no revaluation as siya guys. So number 2, agreed capital is not given or explicitly stated. So we're going to use bonus method. So under the bonus method, again, total contributed capital is equal to the total agreed capital. So Magdaraog here invested 300,000 for a 50% interest in the business. So Miranda and Kalamba transferred part of their capital balance as a bonus to Magdaraog. So again, remember guys nga katong ilang capital balances is 400,000 for Miranda, then 200,000 for Kalamba, a total of 600,000. Then add Magdaraog's investment of 300,000, that's a total of 900,000. So since pareharaman si og pareharaman dapat ang contributed capital and agreed capital for bonus method. So atong kuhaan ang 900 ang kuhaan nato sa ijang capital credit for Magdaraog is 900,000 times 50%. So that's 450,000. So that's his capital credit is more than his investment mo nang that's a bonus to new partner. So again, we're going to base nga sa deduction sa mga remaining partners or sa continuing partners base sa ilang profit and loss ratio. So 150,000 times 3/4, that's 112,500 deducted to the contributed capital of Miranda. Then 150,000 times 1/4, that's 37,500. So deduction to capital balance of Kalamba. So necessary entry. So debit cash to record the investment of Magdaraog. Debit cash of 300,000. To record the bonus to the new partner. Debit Miranda's capital of 112,500 pesos. Then Kalamba's capital of 37,500 pesos. Then total capital credit for Magdaraog of 450,000 pesos. So next, so withdrawal or retirement of a partner. So the partnership may allow any of its partners to withdraw or retire from the firm. So possible reasons are disputes with other partners, old age, katiguangon na, and pursuit for better opportunities. So bisa pag-ingana, the business may continue after such withdrawals. On the other hand, the interest of the retiring or withdrawing partner may be naitulo. First is sold to continuing or remaining partners. Kaduha, sold to a new partner or outsider, then sold to partnership. So sale of interest to continuing or remaining partner. So transaction is recorded in the sale of interest to a new partner. So partnership only recognizes the transfer of capital interest from the retiring partner to the acquiring partner or partners, itong mga remaining partners. Then sale of interest to a new partner. So the sale is recorded in the same manner as in admission of a new partner by purchase. So partnership only recognizes the transfer of capital interest from the retiring partner to the new partner. So any gain or loss from the sale is a personal gain or loss of the retiring partner. So sale of interest to the partnership. A retiring partner may sell his capital interest to the continuing partners through the partnership. So the partnership has the obligation to make payment to the retiring partner either by payment in cash, then transfer of non-cash assets, or recognition of liability for the full or the balance. So the purchase price or amount of settlement by the partnership to the retiring partner may be equal to the interest or at book value, less than the interest or at less than book value, then more than the interest of the retiring partner or at more than the book value. So not the example illustration, guys. So suppose Palaganas is retiring in mid-year from the partnership because of family relocation. So after the books have been adjusted for the semi-annual profits, but before revaluation, well, by revaluation, so ilang capital balances for Silisana, 540,000, for De La Cruz capital, 430,000, then Palaganas capital of 210,000. So that's their capital balances before revaluation. So naingson nga independent appraiser who revalued their cosmetics inventory to 380,000 pesos. So that's a decrease of 60,000 pesos. And their land to 1,010,000 pesos, an increase of 460,000 pesos. So the profit and loss ratio of partners is 1:2:1. So to record the revaluation of cosmetics inventory, so debit Silisana capital 15,000, debit De La Cruz capital of 30,000, then Palaganas capital of 15,000. So total, so cosmetics inventory will be credited for 60,000. So it's a decrease of for the cosmetics inventory and their capitals based on their profit and loss ratio. So to record the revaluation of land, so debit land 460,000 pesos. So credit Silisana capital 115,000, De La Cruz capital 230,000, and Palaganas capital of 115,000. So diriya guys, nag-increase siya sa land and their capitals kay pag-revalue ning taas man siya of 460,000. So after revaluation, their capital balance, the capital balances of the partners are for Silisana, nanas jay 640,000 after revaluation na. Then De La Cruz, nas jay 630,000. So for Palaganas, nas jay 310,000. So di ba ganina kay ang ato bijangkan kay retirement. So or withdraw. So si Palaganas ning withdraw. So for case 1 at book value. So i-assume nato nga ag si Palaganas ni agreed si siya nga i-accept na naman ang payment equal to her interest. So her interest after evaluation is 310,000. So that's at fair value. So the necessary entry, debit capital 310,000 pesos, then credit cash 310,000 pesos. Money ang necessary entry for the partnership, guys. So it's a deduction sa ilang cash, then deduction po sa capital ni Palaganas. Then second, case 2, so more than book value. So suppose Palaganas demanded a 400,000 settlement. So 400,000, so that's more than his interest of 310,000. So the necessary entry, debit Silisana capital 30,000 pesos, De La Cruz capital of 60,000 pesos, then Palaganas capital of 310,000 pesos, then credit cash. So kung nag-wonder mo asa ng 30,000 and 60,000, so di ba 400,000 idyong gipangadyo, so 90,000 nga excess. So ibig sabihin na since ning agreement ang duha ka remaining partners, so it means nga nihatag sila og bonus to the withdrawing partner. So 30,000 is based gihapon na siya guys sa katong profit and loss ratio nga 1:2:1. So for case 3, less than book value. So diri si Palaganas atong iasong eager na gud siya mo withdraw kay and is feeling eager siya mo withdraw kay gusto na jud siya mo ngadto na sa ilang lugar. Then he's willing also to accept. Then ning agree ijang mga partners. So necessary entry, debit Palaganas capital of 310,000, then credit cash of 280,000, then Silisana capital of 10,000, Then credit also De La Cruz capital of 20,000. So payment to a withdrawing partner at less than book value may also imply that partnership assets are overvalued. So in this case, overvalued assets should be identified and reduced to their fair value. So bisan pag nasa jay more bonus to the remaining partners, ma-reduce gyapon to sa remaining partners at fair value. So next is the death of a partner. So the death of a partner dissolves a partnership. So when death of a partner does not result to liquidation, accounting procedures to be followed are similar to those discussed in withdrawal of a partner. So deceased partner may be considered to have retired from partnership, and his heirs or estate can expect to receive the amount of his interest from the business. So if payment to the estate of the deceased cannot be made immediately, so ang balance sa capital account of the deceased katong namatay, i-transfer to siya sa liability account sa partnership, payable to siya sa ijong. So next, lastly, incorporation partnership. So next, assets and liabilities of the partnerships are transferred to the corporation in exchange for shares of stocks. So shares received by the partnerships are distributed to the partners based on their equity interest. Then in the books of corporation, receipt of transferred assets and liabilities will be recorded along with the shown share capital for the incorporators are the former titles. More than that, guys. So this is our interview. Thank you, guys.
Okay. So that ends our webinar for tonight. Goodbye, everyone.
Thank you.
Thank you. Una mo,
Goodbye. Thank you.
Thank you.
Okay.